Well, Mitsubishi Motors has decided to pull out of car production in China due to weak demand. It's reported that the company is discussing its withdrawal with local joint venture partner Guangzhou Automobile Group. The automaker's sales have fallen far below expectations in a market that is rapidly shifting to electric vehicles. It sold less than 32,000 cars in China last year, down more than half from the previous year. Jim Saker is president of the Institute of the Motor Industry at Loughborough University. So, Professor, what specific challenges is the Mitsubishi Motor facing in China at this point?
Well, I think it all really came to a head on July the 1st this year, when the Chinese government introduced stricter automotive emissions regulations, and that led to 40-odd brands having a major price-cutting war. And SAIC VW had subsidised sales of $537 million to actually just get rid of the ICE vehicles that were on the market. So to a very large extent, this has been kind of accelerated by that move on July the 1st, that they basically don't have a competitive product in the EV market.
And how does the popularity of electric vehicles in China affect the Japanese companies' sales of gasoline-powered vehicles?
It's obviously going to be enormous, because going forward, China is committed to EV. It controls 95% of the battery production worldwide, plus the raw material supplies. So from the point of view of China, it's gone down the EV route, but it's now got a situation where it's got a massive supply within its domestic market, and that's led to a lot of price competition, even eliminating the internal combustion engine vehicles on July the 1st.
And do we have any details on Mitsubishi's plans for transitioning towards EVs, possibly, or other strategies in response to the market trend in China?
I think they're obviously part of the Renault-Nissan-Mitsubishi alliance, and Renault have gone very much down the EV route. Nissan have been within the EV market for a long period of time. And so they're looking forward to a collaboration between those three. I think what it looks like is that there's going to be 5 basic floor frames produced by Renault, which is going to be the base of their EV route. And then Nissan are going to concentrate on solid-state batteries, and Mitsubishi will ride on the back of the developments within Renault-Nissan to produce product and brand, particular products within their own brand.
And do you think the decision will likely have an impact on the Japanese car makers' global operations?
Well, I think it depends which Japanese car manufacturer we're referring to, because obviously Toyota has a very bigger global reach, and therefore they're looking at a very different situation. If you look at the world generally, Latin America, South America, Africa isn't going to go down the EV route anytime soon. And so therefore they're looking at a portfolio approach with fuel cell potentially, hydrogen fuel cell potentially longer term, but also self-charging hybrid and some ICE models around. And with Latin America potentially going biofuels. So you're really looking at 3 distinctive markets for EV: China, Europe and the US. And therefore players like Toyota will try and get around and look at the global perspective. It does depend on which markets the Japanese decide to sort of target. If Honda goes into Europe, then it's got to go EV. But there's going to be a challenge going forward as well.
Thank you very much for your insight. That's Jim Saker, president of the Institute of the Motor Industry at Loughborough University.
Thank you.